We always knew that China's President Xi was not going to attend the COP26 climate conference in Glasgow, instead sending a delegation and translators to relay China's messaging on climate change. But in fact, Xi has his hands full at home. Despite slightly better than expected economic data today from manufacturing and services PMI surveys, China is facing more COVID lockdowns. It's got food shortages from flooding. It's seeing power restrictions. The Evergrande debt crisis isn't going away. And what some are suggesting is a heating up of the political tension between the Chinese authorities and Taiwan. With China so deeply involved with so many commodity markets, what does the mining sector make of all this? Well, John Meyer is the man to ask. He's the founder and mining analyst at SP Angel. He joins us now on the line. John, welcome. There's a lot going on at the moment in China. And as I said, President Xi has his hands full at home. And I guess the last thing he really wants is further questioning on China's dealings with climate change. What do you make of what's happening? And I suppose the really big question is this the canary in the coal mine for us all in warning us that China is about to slow down and slow down in a fairly big way?
Well, the canaries are probably quite busy in Chinese coal mines at the moment because the Chinese authorities effectively pushed to ramp up coal production to recover power production in China. They had power shortages. Some of that was, I think, to do with hydropower. A lot of it, I think, was more to do with Chinese manufacturing ramping up their own production levels. But that's been taking power away from aluminium and manganese and magnesium production. And that's affecting global markets in various ways. Magnesium prices clearly going up on the back of that. Aluminium prices rising strongly as well. But there's a bit of a push and pull going on. The commodity markets are, or should be, very wary of the impact of a slowdown in China. And there is definitely a bit of a slowdown coming, I think. We see Baltic index shipping rates coming off quite heavily. Panamax shipping rates also coming off, or Capesize rates as well. So the price of shipping from China to the West is beginning to normalize itself again, and that might take a bit of time. And part of that is because China has its own issues. COVID clearly is a significant issue for them today, with flights out of Beijing being cancelled. I think there's at least 50% of flights, if not all of them now, and various cities now going into lockdown. So the question is, are the Chinese authorities losing control of COVID? Have they decided maybe that actually they can't control it anyway? Now they appear to have developed a better vaccine, because the original Chinese vaccines, Sinovac and the others, weren't that good. They only had about 50% efficacy rates, which was not sufficient for controlling a disease like this. And in fact, as we now know, none of the vaccines are that good at controlling the virus. All they really do is ensure that your immune system is ramped up to a level where the COVID doesn't put you in hospital. So, and what will happen with us over time is hopefully we'll become naturally immune to the COVID virus and its variants. So maybe China is now going this way and beginning to, as they lose control of the virus as it progresses around the nation, perhaps they'll decide, well, just to let it go.
It's interesting, actually. If I can just quickly interject there, because I was looking at some of the data out of China, and my understanding is that China is locking down areas, let's say the size of London. I mean, China's a big place. It's got a lot of population, of course, compared to what we are like here in the UK. And my understanding is they're locking down areas the size of London with just one case or just a handful of cases, where, of course, here in London, for example, there's pretty much freedom of movement for people across the city, with something like 200 cases per 100,000 people. And London's population is 9 million plus. You can do the maths on that and you can work out. We seem to be far more relaxed about it over here. But of course, as you say, we've got a better rate of injection and a good efficacy on those injections. But I guess the part of the thing about China is just what the Chinese authorities are going to do to counter all these headwinds. Does it have the firepower to continue to support the economy and support the miners as well in the process? Because that's what we're talking about. In helping the markets, giving extra financial support to the markets, which now seems to be needed.
Well, I think China has as much firepower as it wants, in that it could. What it's always done in the past is ramp up stimulus projects, And also it's ramped up domestic construction projects, so house building for flats and apartments. But of course, we've got the Evergrande crisis going on at the moment. Although Evergrande has restarted 40 development projects that I think must have been put on hold. And it's not just Evergrande. There's several other highly indebted property developers, not quite of the same magnitude as Evergrande, but in similar indebted states, if not slightly worse. But I think China is big enough and strong enough to overcome that with its own stimulus projects. The question then is, how fast can it re-stimulate production? And what we're looking at is in the month of October or of September, concrete and steel production both came off. I think concrete was off 13% and steel was off about 15%. Now, was that due to reducing pollution? And was that due to reduced energy availability, or was that due to other issues? And we don't quite know. I mean, what really was it? Was it due to Evergrande slowing down? That may be the case with the concrete and possibly with the steel as well. But perhaps steel producers and concrete manufacturers are simply taking a more cautious approach to their inventory levels and what they're producing right now. So we don't quite know. But in the meantime, I think what's very interesting is the metals that are being used for electric vehicles and for wind turbines and solar farms, those renewable energy electric vehicle materials are still looking very strong. So whilst we've got headwinds in China, we've still got very strong consumption growth in this one particular area, which does use a lot of base metals and specialist industrial minerals.
Just wanted to get your thoughts as well on this day when we are talking just ahead of the Federal Reserve interest rate decision. Do you think much is considered around the table with the FOMC as to what's happening in China? Do you think there's an extra element of concern perhaps maybe that's building? Because whenever the Fed moves, they always quite often like to take a look at the global economy. Is China going to be something they're going to be talking about very much, do you think?
Oh, this will be front and center of what they are discussing at the moment. So on the one hand, they want to offset higher inflation levels, but they do tell us that they see inflation as a temporary phenomenon. And I think they're correct. We're seeing signs of this. So inflation has been driven by the run up in oil and gas prices. That's natural. But of course, that will level off. Other higher input prices have run up as well. But of course, they in many respects have leveled off, although iron ore and thermal and coking coal prices have come off dramatically from their high levels over the summer. So I don't think we're going to head back into a deflationary environment tomorrow, but I think the inflation is temporary. And I would be surprised if the Federal Reserve raised interest rates later today, because I think there's just too much uncertainty going on in China to want to risk knocking the market just now.
Yeah, we'll certainly have to consider that when looking at the interest rate decision this evening. Just wanted to move on to take a look at some more of what's happening within the mining sector this morning. I know that you've got a number of clients that are obviously active in the market this morning. I was interested to get your thoughts on some of the announcements we've had today. Anything passing your desk this morning worth talking about?
Certainly Cornish Metals, which is looking for tin in Cornwall, and is a stock that I've bought myself personally. Came out with some very good, particularly interesting results this morning. 9% tin in one of the intersections, 202 grams per ton of silver, which is unusual because silver is not something that we expect to see in Cornwall, and also quite high copper grades, ranging between 0.5% and 2% copper. So looking actually really good at the United Downs project. They also have the old South Crofty mine that they will look to develop in future years. But for me, my money's on United Downs coming to the market first in terms of tin production.
Yeah. Anything else worth mentioning? I noticed actually a headline this morning around Macango and Codon, I think, were also in the headlines today.
Yes, Macango, quite busy increasing their stake in a pioneering rare earth element recycling business. So they now hold a 41.6% stake in Hypromag. So that's very good news to see Macango going into recycling. Remember, they still have the Songwe Hill rare earth project in Malawi, which is coming slowly towards production. So Macango positioning itself to be a reasonably major producer of rare earths in the Western world.
And Kodal?
Kodal Minerals buying 10% of the lithium project in Mali that they don't already own. In fact, they're buying the two underlying companies that hold licenses where that project sits. So that gives us great confidence that Kodal are confident that their project will be developed. Because why would you pay cash to buy in 10% of a project if you didn't think there was going to be a very good chance of development of this in recent months? So again, this is a stock that I bought personally myself in recent months.
Okay, look, John, we'll leave it there, but thanks indeed for joining us with an update on what's happening around the world in terms of some of the stories in the mining sector today and those small caps in view from John's position there at SP Angel. It's John Meyer joining us there on the line from Oxford. That's it. We will be back a little bit later on with more interviews here on IG.com. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.